next Hans Sicat, the CEO of the Philippine Stock Exchange. He's been back a little bit longer, I think a dozen years or so, but he spent many years working in New York. I know he went to school in the U.S., but he worked for Citicorp for many years. I can't remember how many, but it's 15, 20, something like that. Worked across the world, but in the U.S., and then came back to Philippines to run an operation here. He finished off and for a very short time started a BPO in the legal side before he got pulled back into the capital markets world with the Philippine Stock Exchange. And then in a happenstance, one thing led to another. He was on the board, he was on another board, and then pretty soon one day they said, you should be the CEO, and he has been since then. And a lot of transformative work has been done over the past few years by Hans and his team. So, you know, the stock market goes up and down. Last time we had Hans speak, it was on the upside. Today it's maybe, you know, pulling back a little bit. Yeah, so it's an up and down thing in every way for Hans Sicat. So we'll look forward to hearing his story of how things are going. And please welcome Hans Sicat of the Philippine Stock Exchange to the stage. He's always so well dressed too, and he's on his way to the airport after. So I was glad he was able to speak for us. But yeah, we look forward to hearing what he has to say.
Well, thanks very much. Good morning, everybody. It's always a pleasure to be here, Richard, to help share some views. I was actually trying to figure out what the exact theme should be, given that there's been a lot of let's call it market volatility lately, certainly over the last 4 or 5 months, not just in our market, but globally. But what I'm going to do is give you a sense of what's happening here, for those of you who may or may not be following it, and really talk about what I think are the general themes that we should be thinking about as we look at what's happening to, one, the stock market, and secondly, the Philippine economy. So, let me see. This works? Oh, here we go. Here's a quick discussion outline, and I will, as I mentioned, talk about some very basic highlights. I've entitled the second point, Global Challenges, really what we should be thinking about in respect of the developed economies. And the reason I'm talking about this is that the fourth quarter of last year, you saw a huge flow of capital outside emerging markets, or meaning from emerging markets to back to the developed markets. And I guess the question is, what does that mean for the Philippines? And highlight a few local challenges and opportunities, and finally update you on the various PSE initiatives. Now, some of you have seen this slide before, wherein we talk about what's really going well for the Philippines. But I'd like to highlight not so much the good macroeconomic news that you're all familiar with. I would say there are probably 2 or 3 items worth noting in respect to what's happened last year and how the Philippines is viewed. The first really is the fact that we have been moving up the WEF Global Competitiveness Ranking. Now, why is this an important trend? I think it's important because it really shows that the various players in the economy, you know, it's not just the national government, it's not just the business sector, it's not just individuals, but actually a lot of different things, including, by the way, local government units, kind of pulling their weight and collectively demonstrating a much better, let's call it space and environment, which the Philippines can operate in. Now, clearly the investment grade ratings of the top 3 global rating agencies were very good for the Philippines. And the question is this sustainable, and are these ratings in fact going to go up? Now, I think the news that the central bank governor gave us at the end of last week, which talked about Fitch commenting very positively about the work that has been done after the upgrades, I think point to the fact that there's a lot of work being done on a structural level. And I guess secondly, that work has not stopped in terms of trying to get to improved metrics. So I won't go over the macroeconomic numbers, but just to say that continuing metrics, I think, of improvement should be a good benchmark for how the Philippines is doing in respect of not just itself, but our peers in the region. Now, a few of you have also seen this chart updated up to, I guess, yesterday, really. It's quite interesting that we are one of two economies in the world, as far as we can tell, that has shown that the markets are generally on an uptick for the last 5 years, since the great financial crisis of 2008-2009. Now, there are, of course, a few ways to interpret a graph such as this. One might say that valuations are simply going out of whack. The second way of thinking about it, which I prefer to, is to say that a lot of the underlying companies that are in this economy are in fact performing better, have stronger earnings growth, and perhaps have stronger revenue earnings potential than what we've seen previously. And again, that's a comparative basis when I take a look at not just our Southeast Asian neighbors, but perhaps Asia in general, and maybe emerging markets as a whole. Yeah, a few more. This might be a little bit of beating our chest, since our team picked out, of course, the right time periods to show that the PSE has outperformed a few other stock indices over whatever these periods of time. Maybe with the exception of Japan, which has had their own version of quantitative easing. Again, the news here is that despite the volatility in the markets, I think that the relative strength, if you view the stock market as reflecting information, as I told us in school, right, reflecting all information about the fundamentals plus maybe some of the irrational behavior as well, then it's actually a very interesting as well as perhaps encouraging sign. Now, there's something which we talk about a lot, and I'll explain what these graphs are. From the stock exchange, people ask me all the time, where should the index be? And I always say that what we're trying to strive for is not so much where the index will be, but actually the depth of the participation in our market, which means that we measure what's the liquidity. I know talk about PE and PE exits. It's very important that you have liquidity in the market and continued and growing liquidity to demonstrate that it's not just a few stocks, but actually the market in general, as well as various participants believing that they can come in and out of the market and basically not just monetize, but actually feel that they're not going to get stuck in any particular situation. Now, the upper graph is actually the total daily turnover over the last 6 months in pesos, and maybe just to give you some statistics. Clearly, through the last few years, the overall depth of the market has increased by this metric. You see that by the lower graphs. In 2011, it was about 5.7 billion pesos per day that we were trading. Last year, we were trading up to about 10.5 billion. And what this means is that if you take a look at this lower graph here, the first quarter of 2013 was perhaps a little bit stronger than the start of the year, wherein we were trading at about 9.3 billion. This year, we've started off at a 6.5 billion peso per day average. Now, this actually is reflective of what's happening in the world. As I mentioned earlier, the last quarter of 2013, there's a huge sell-off from emerging markets, and essentially an indiscriminate sell-off. And anyone who was managing money, to start off with the big institutionals in particular, basically just said, I'm going back to the developed markets, and it doesn't matter where your address is, I'm not going to make I'm not going to differentiate between these countries. And obviously the Philippines being an emerging or frontier market, depending on your classification, obviously was part of this issue. Now, it's interesting that despite the slow start in 2014, we are seeing that the average daily flows are again beginning to climb up. Again, that's back to the upper chart and that trend line. Here's another part of the story. What we're seeing is that a lot of the movement has really been the foreign investors actually pulling money out, which is what you see in the upper right-hand chart. It's from a net positive position in the same period in 2013. They're actually net short, as we say. But maybe the good news when we talk about the market in general, and again, one of the metrics that we talk about in terms of seeing how healthy is our market is the fact that the amount of funds raised, transactions done in our market has been still quite healthy. In the first quarter, where we've done about 45 billion pesos worth. Interesting to note that in 2012 was the all-time record. We were able to raise through the exchange about 219 billion pesos, which was, again, if you take a look at our ASEAN neighbors, probably the first or second one amongst our peers, again, depending how you're counting the beans. Last year, it did slow down. I should note that nothing happened during the taper talk end of May for about 3 months. So there was zero fundraising on the exchange. But what that tells you is that despite the volatility in terms of in and out flows, there still is, I guess, a strong belief of issuers that they can raise money through the exchange. And to the extent that, I guess a previous presentation talking about PE investors, one thing to say is that they can find at least an exit in the stock market. Now, one of the other interesting pie charts that we have is the one on the lower right-hand side, which talks about the share of foreign to domestic trades in terms of value. Up until last year, this was almost very even. It was alternating between 49 to 51% in either direction, which basically told us that local investors were as active as foreign investors. We actually think that this graph, the first quarter graph, simply reflects the sell-off by a lot of foreign investors. That's why a lot of the activity is actually biased towards what we call foreign money at this stage. So let me turn to a few trends and say, what should we be looking at, given that we've seen the sell-off in emerging markets, perhaps a little bit of a correction locally in terms of the price-earnings ratios to, let's call it, more normal levels when we compare to our, not just ourselves historically, but also to our Southeast Asian peers. And what theme should we be thinking about? I actually think we should really think about what's happening to our main trading partners. And interestingly enough, although we're talking about, and one of the themes we like to talk about is ASEAN 2015 with the ASEAN Economic Community supposedly starting by then in a year's or less than a year's time. The reality is our trading partners, which are really Japan, China, and the US, are perhaps more influential in what's happening in our economy locally, as well as what happens in the capital market. Let's look at the United States. I should note, by the way, that the trade levels to ASEAN relative to these top 3 countries actually are a lot smaller. So again, if we're looking at the effect of trade flows, maybe not necessarily service flows, but certainly trade flows, it's clear that the 3 trading partners, traditional trading partners of the Philippines, are going to be continuous drivers for what happens in financial markets locally. Now, it's quite interesting also that we find that the share of remittances into the U.S. from OFWs, a huge part actually comes from the United States. I'm not sure that people know that. Typically, the view is that it's Middle East based, and that's probably true if you aggregate all the countries, but certainly not in terms of a per country basis. Now, what we're seeing, of course, in terms of U.S. growth is that it is perhaps returning to a more normal curve, and there has been what we call the taper talk. In other words, the U.S. Federal Reserve reducing their purchases of U.S. securities And again, the impact to the Philippines, well, first of all, to emerging markets, and then next to the Philippines, is that there is probably going to be some slight pressure on interest rates over the medium term, maybe not immediately. I think the immediate reaction that we saw, in fact, last quarter of last year, was this view that portfolio managers said, probably better for me to now move money back into the U.S. for the time being, given that there's a growth in that market as well as signs of recovery all over, and therefore, from a portfolio perspective, reduce my risk weighting to emerging markets, Philippines included. Now, is growth in the U.S. good or bad for the Philippines? I think arguably it can only be good. One, from the export level. I think two, what's shown is that when the U.S. economy is growing, clearly most of the economies in the world tend to also respond in a positive scenario. And of course, to the extent that the Philippines has a huge BPO industry, which services, I would argue, a huge part of the U.S., or at least U.S.-founded firms, then a recovering U.S. will mean that there's probably more work for us as opposed to less work. And I think that as the taper talk becomes clear and as it sinks in that the U.S. Federal Reserve will continue their cut down in bond purchases, then I think portfolio managers all around, Philippines investors included, will basically say, okay, this is part of the normalized game, and I should not rely on the fact that there's going to be easy money around and perhaps artificially low interest rates to deal with. Japan, again, you've probably heard of Abenomics with his 3 arrows, and again, their own version of the quantitative easing, which has basically spurred the Japanese economy for the first time in, I guess, 2 decades. Good or bad for the Philippines? Again, arguably good. It's the first time that the Japanese economy is actually back on a growth path, and I'm sure there are lots of critics of Abenomics around, but at the end of the day, it is getting Japan Inc. to work better and perhaps be a little bit more, let's call it brave in terms of going back out into the world. Interestingly enough, some of the geopolitical issues that we've faced, or meaning we, Asia, have faced, I guess, vis-a-vis China, have also led to a lot of these stories of Japanese manufacturing firms also bringing back to the Philippines some of their manufacturing, some assembly plants, and so on and so forth. Although, in fact, some of this actually started because of the floods in Thailand about 2 years ago, for those of you who remember what the situation was. So a combination of growth in Japan and a combination of perhaps diversifying risk out of other production areas, although it was mainly due to natural disasters, although I guess Thailand's issues today in respect of the political spectrum mean that the Philippines probably is a net beneficiary of activity and should be a net beneficiary of activity. China, big old question. The usual trend and the usual thing that portfolio managers, analysts, and so on and so forth talk about is that there's a slowdown in China, and that's bad for the global economy. I often think about this theme, and I actually tend to disagree that it's a net negative, because it's interesting. They talk about a slowdown on China from maybe a double-digit 10% growth to an average of high 7% growth per annum in GDP. That's not a slowdown to me, considering that the Philippines, in fact, has only had 1 quarter of 7.8% growth. So that's actually magnificent growth in respect of a large economy trying to clamber up. Now, of course, how that's done and issues on their financial sector, there's a debate going on there whether that can negatively infect the global capital markets. Again, my view is that, interestingly enough, because China Inc. is really, at the end of the day, the government, or when you talk about the financial sector, so that it's really one transferring one liability to another government pocket. So it's probably not the same as the U.S. financial crash of 2008. But I think the point to make is that with the growth of China, I think you've seen some of these analysis that it will be the largest economy in the world at least by 2030, no matter how you look at it. It will overtake the U.S. as the main driver of global growth. Now, China is our neighbor, and despite the geopolitical issues and maybe big rhetoric about the Philippines and the Philippine or China Sea, whatever you side of the debate you're on, China will continue to impact demand for ASEAN, for Southeast Asia, and clearly for Philippines, even though you might argue it's muted today. And the fact that we actually have an increasing export performance to China demonstrate that as a market, it's a very important market for the Philippines to keep on taking a look at. So, net-net, is Philippines good or bad? Is China's slowdown or China's behavior good or bad for the Philippines? Again, I think the conclusion should be that growth in China, even if it slows down to low 7%, should be a good thing for the Philippines. Some local challenges and opportunities. I'll try to wrap this up quickly. I think most of you know about these themes, and I think we tend to highlight them to policymakers to say that, look, you really need to take a look at these issues, perhaps be a little bit more proactive. We are part of the PSE is part of an internal forum called the Capital Markets Development Council. It is actually chaired by the Secretary of Finance. You have the Bangko Sentral there. It's co-chaired by the Bankers Association of the Philippines, and you have other representatives like the Securities and Exchange Commission, Insurance Commission, and other financial sector representatives. And I think the themes that we point out here, which talks about trying to increase inclusive growth, necessary infrastructure build out, consistency of rule and law. By the way, item number 3 is something that we, I think, struggle with because almost every year there seems to be an example of a particular situation wherein a government-type contract is being disputed, and it does not send the right signals, not just to external investors, but I would argue to investors as a whole. And I think that we need the discipline locally to say that if contracts are in fact negotiated in good faith, then they should be carried out in good faith through the term of the contract. So we have these distractions in the water utility, the energy utility, and so on and so forth. And these are the type of things that whilst they may have perhaps some legal basis one way or the other, I think that the bigger theme is that we need to be a little bit more consistent and thoughtful. One, as we negotiate contracts, but two, as we put them through the implementation phase. The fourth item, low awareness about the ASEAN Economic Initiative. I think more and more the government is listening to this, although compared to our Southeast Asian neighbors, it certainly is not in the discussion level that, say, a person on the street in Thailand or Malaysia or Indonesia seem to have it. Here in the Philippines, it seems to be an interesting concept, but nobody has really talked about it. What does it mean for you and me on the ground? What does it mean for our companies? What does it mean for LGUs and how they compete for investors into their own towns? These type of discussions are not yet widespread, and I think we need to have a higher level of awareness. Stock market, limited products. In a way, it's something that we had to deal with in the Philippines. Within the Philippine Stock Exchange ourselves, and we are doing a number of initiatives to correct this. And finally, of course, on the capital market side, is that relative to even the banking sector, investors in the capital market locally are still of a small base. So, having said that, of course, there are always opportunities where there are challenges, and I would say that all these nice themes that we have, increase in foreign direct investment, which, by the way, for the first time in a long time across $3 billion mark. We were kind of kidding that we were probably stuck at a $2 billion FDI. Again, extremely low by all measures, but some growth is better than nothing, and hopefully the trend line continues now. Our well-capitalized banking system, some say over-capitalized banking system, should be able to withstand a lot of the ups and downs of that we are seeing. And of course, the consumer spending profile. And finally, the recent, I would call it, upgrade notes of JP Morgan and Macquarie in terms of Philippines as a long position. Just to wrap the discussion up, I'll tell you what we're doing at the PSE. So we've had a very successful year last year as an operator, and I think more importantly, in terms of trying to bring in a lot of new initiatives, new products, and new services to the market. We hope this spurs a lot more activity, deepen our capital market, deepen participation, and in fact, more importantly, deepen the participation rate of individual investors. So here's a couple of lists of what happened. ETFs got launched last year, first index options and futures, first Sharia compliant list ever. TradeX, which is the online platform, which we basically private label for other broker dealers. So hopefully they use it. And in fact, next week there will be another announcement of a relatively large firm using it, and about 8 new others who are in beta testing with us. And PSE Edge is really the new reporting system that we have that, by the way, is now available directly on your tablets and I guess by the end of the month on your smartphones. And I would argue that our 2014 initiatives are focused, again, continuing this growth in products and services to the market. I won't go through all of these. Only suffice to say that our goal is to basically get us to a competitive position so that when you take a look at the PSE or the Philippines and the capital markets relative to our ASEAN neighbors, hopefully in the next few years, we'll come up even to some of the other countries. And I guess with that, thank you, and follow us on Twitter and follow us on Facebook. Thank you and good morning.